grace that exceeds our sin and our guilt. Yonder on Calvary's Mount of Thorn, there where the blood of the Lamb was spilled. Grace, grace, God's grace, grace that will pardon and cleanse within. Grace, grace, God's grace, grace that is greater than all our sin.
Can we read all of it? Give me, I killed this by a seminole. Semitone. Marvelous infinite ray of okay. Sin and despair of sin and despair like the sea waves cold. Strengthen the soul with infinite loss. Grace that is greater, yes, grace untold. Point to the refuge, the mighty cross. Grace, grace, God's grace, grace that will pardon and save within. Grace, grace, God's grace, grace that is greater than all our sin. Oh, just any later?
No.
Marvelous infinite marvelous grace.
Really best
Oh, so I clicked and he clicked.
all who believe, you that are longing to see His face, will you this moment His grace receive?
Back or front?
God's grace, grace that will pardon and cleanse within. Grace, grace, God's grace, grace that is greater than all our sin.
Thank you for the beautiful singing. The next time I'm going to be a barista. I think we're going to welcome our brother Elder Charles to take us through the program. I'll be prepared for with your questions so that we can have interactive and engaging afternoon. So, my brother, you can take over from here.
Okay, good afternoon, dear brothers and sisters. I know the pastor wanted me to discuss a number of topics, and then I told him no, because each topic that he wanted me to discuss was big in its own category. And so I decided, because we are in a tax season, I just want to create awareness about tax, because I feel there are certain things that we need to know that probably we do not know. Because the Canadian tax system is a little bit complex, and it has a lot of, things that are involved, and a lot of information that you may not be privy to. And therefore, I will take you through that. In the last, I think, 4 years, I've been volunteering as a tax preparer for Canada, for my community. Unfortunately, the pastor asked me that, but why? I mean, in Kenyan church, we didn't know But I think it just went out of my head. But I've been doing it, and for free. And I wasn't charging any money to anyone. And so I've been doing that for 4 years, and the government appreciates it, and they recently even gave us a certificate for helping the community. But when doing that, I don't help everyone. There is a certain limit. Like I just help like people that have small, whatever, simple. Okay, although sometimes brothers come and I say, okay, I will try to help you, but I always help small kind of people with small taxes that, I mean, so yeah, it's me, you already know me. I'm a qualified accountant here in Canada. So what I'm going to speak about is out of my experience and the knowledge I have. Yeah, this is just some verses to leave us scratching our heads. I get it from Proverbs 21:20, which says a wise man saves for the future. And since I'm talking about tax, we are talking about refund, saving, and money and things like that. And so roughly 2,350 verses in the Bible concern money. They talk about money. And the researchers say that is almost twice as many verses about faith and prayer combined. So Jesus, of course, had a lot to say about money. He recognizes the importance of money, and he knows that money is the lifeblood of a church. Can you stand from the other side? This way. Oh, okay. Oh, thank you. Okay. So I also said nearly 15% of everything Jesus spoke about related to money and possessions. So that is 16 out of 38 parables dealt with the topic of money. You can research it and you'll find out that it is true. So the only object Jesus taught more about than money was kingdom of God. You can research for yourself and find out why. Because the scriptures are very clear about inheritance, connection between a person's spiritual life, attitudes, actions concerning money and possessions. And so we keep talking about money on the Sabbath, not because we are ignorant. We talk about it because even Jesus himself talked about it many times. And so don't say these Adventists of all nations are not Christians. We are. So I'm going to talk about the Canadian tax system. I don't know if this is working, but it's fine. So who files tax in Canada? So basically, I'm saying that all residents of Canada for tax purposes. If you are a resident of Canada, it doesn't mean you have a PR. A resident of Canada simply means you live in here and you work. So whether you're whether you're a refugee that has just come, but you work in Canada, whether you're a student who came here on a student visa, you're expected to file tax. So a resident means somebody who lives here and works here. And I'm also saying that the tax in Canada is basically progressive tax system. The more you earn is the more you're taxed. So some people here work like, even if you work 20 shifts, you will pay tax, and the tax you pay is more than somebody who works one shift. And so I'm simply showing you that if you earn like 49,000 or less, you pay 15%. So if you earn $100, $15 will go for tax. Then if you earn between 49 and 98, you pay 21%. And then above that, it goes on and on and on and on and on and on. Just basically, I'm showing you just a snapshot. We all know that the deadline is April 30th for filing tax. So you still have some time. But for those that are self-employed, who work by themselves, maybe Brother Abel, whatever, is June the 15th. So, but if you file around 15th June, you will not be penalized. But if you go beyond that, then you're likely to face a penalty. So I'm also saying that if that date 30th falls on a weekend, then you consider Monday as the deadline, the following Monday, which will be 2 days, whatever, after the 30th. So there are some benefits if you file tax. Some of the benefits is that you get credits or government benefits. There are a number of benefits, and we will see some of them. So it is good to file tax because you expect to get some benefits. But of course, in some cases, you may not get benefits. Don't say Charles told us that I have to get. No. And some people look for the benefits in whatever form it may come. Like they got some tax preparers or accountants, and we can forge. I can make you get a refund, but it can come back to you or to me. The other thing is that in Canada, for example, if you want to borrow, you want to get a mortgage, you can't escape somebody to ask you for your tax for last year or last 2 years. And therefore, you cannot basically escape tax. If you're somebody who doesn't want to file tax, you are in trouble. OSAP will not give you grants if you do not have tax information. And the other thing is that there are stiff penalties for not filing the tax. So basically, we need to file tax. I know we come from backgrounds where filing tax is not an issue. I've never seen it in my country, but here we have to. Yeah. So, I mean, these are just documents that you will get maybe in the mail or on your My CRA online. Those are the T's that you get. They are T's, you know, T4, T4A. The other one is if you work as an employee. I work as an employee for someone, so I need it. I need that. And then T4A if you're self-employed or if you got some bursary or scholarships from maybe your school, you have to have the T4A for filing tax. If you don't have it, you can request it. Usually you get it online, even on CRA, your account, or from school. And then for retirement income, you get that once you retire, maybe get 60, whatever, and you retire, then you will be getting money from the government. So the T4A, and then people who are on social support, you get usually T5 something, T5007. And then students, tuition, and textbooks usually use that. Those are not the only ones, there are others. I want to talk about married couples. In Canada, they don't force us to file, or we are not obliged to file tax as married people, like one tax return for spouse and whatever. But in US, it's compulsory, like you have to file as a married couple. But here, it's not required by law, but it is important that you file your tax, or you tell CRA that you're married. There is a reason for that, because CRA wants to know your marital status for purposes of the income-tested benefits. So there are certain benefits we get when we file tax that are tested on married income, total income. So CRA looks at the total income to give you the HST credits, and then also to get the child tax benefit, or CTB. So they will look at the total income. So if you file as a single father or mother, when you might get wrong numbers, and then CRA will come after you. Yeah. I mean, you may not get that immediately, but they usually come back to you. So, and then the other thing is that when you file as married couples, or you file, you show your status as married, it helps to combine the charitable and medical expenses. like the money you pay in church, for example, how it helps is that if your husband has a higher income tax bracket and he is expected to pay more tax, assuming maybe after preparing tax, your husband is supposed to pay maybe $2,000 back to CRA, and you as a spouse, for example, you paid all nation in your tithe and offering, you paid maybe $2,000. Then your husband can use the $2,000 to remove the tax that he would have paid to CRA. I don't know if it makes sense. So the money we pay for charities, for church, for whatever, simply helps you to reduce your tax payable to CRA. So if I file as an independent man without a wife, and then you also file yours, my wife files separately, I cannot use your charitable money you paid to reduce my tax that is due to CRA. So that's what I'm trying to say. Then the other thing is that I can't transfer tuition and textbook amounts. Like if I'm a student and I got T22, whatever, 02A, if I got that one and I paid school fees, and then I spent money on textbooks and so on. So my expenses for textbooks and all that, I cannot give them to my wife if we register as singles. But if we register as married, then I can use my wife's school fees, or my wife can use my school fees to reduce that kind of thing. Then the other thing are child care expenses, medical expenses, contributions. You can also contribute to your wife's RRSP. RRSP is money for old age, like, you know, it's like a retirement kind of fund. And so I can contribute to my wife's RRSP, which I can use to reduce my tax that I pay to CRA, because we are looking to reduce, how do I reduce the tax that I'm going to pay if I have to pay? And so there are so many ways we can reduce the tax we pay to CRA, and legally without cheating or stealing or whatever it is, without fraudulent kind of activities. So those are some of the things. So it is a good thing, but sometimes there are disadvantages to file as married people. And one of them is that when we sell a house, for example, you sell a house, we are married, and then you sell a house, I sell a house, it's only one house that is not taxable. The other house will be taxable. So you need to know that. But if we are independent, you're single, I'm single, I sell my house, you sell your house, the each will not be taxable. So you benefit from that. So I want to give you like some kind of distinction between deductions and credits. Now, deductions in tax simply reduce your income, which makes your tax paid to CRA less. But credits are like benefits that you get, like HST credits, like child tax benefit. You get maybe $500 every month for the babies, for any child below 18 years of age. Is it 18 or 16? So those ones, deductions, they reduce your income. And then the income that you pay, like for example, if I earned $10,000, the deduction will reduce that income down. Meaning that once my income is reduced, it puts me in a different bracket of tax. If I make $100,000 and I'm supposed to pay 21% tax, and maybe I incurred expenses for $60,000 and I remain with $40,000, then it means I'm going to pay 15% of tax. So we look for ways of reducing that tax, and that's one way. And examples of those expenses, like for example, self-employed business expenses, those that are self-employed, Uber drivers, trucker drivers, and whatever. The good thing is that the moment you keep your expenses, receipts, the food you ate, entertainment, the depreciation, there are so many expenses. You almost, whatever you drive, gas and whatever, is for the business. And that's the cool thing about businesses in Canada. In fact, if you're self-employed, you're better off than us who are employed, because the government allows you to deduct those expenses you spend, even the phone, because it's for business. I mean, if I'm self-employed, my phone, I use it for business. Although sometimes you use it for some of those lines are difficult to draw. So you just have to reduce and say, okay, I paid for my phone, and so on and so forth. And so there are other deductions there. And so as you're seeing, there are so many that you can use to reduce your tax. So tax credits can be refundable or non-refundable. Non-refundable credits, these ones simply lower your tax that you're supposed to pay to CRA. But it's not money, cash, that comes into your bank account. And then, so some examples are those ones, like medical expenses, like eyeglasses and all those and whatever, dental and so on and so forth. So once you spend that money, you don't get the money back, but those expenses will reduce your tax. If CRA says that, okay, you're supposed to pay us back 1,000 and you have expenses equal to 1,000, they will reduce. But if you have expenses equal to 1,500 and what is due to CRA is 1,000, the 500 you will not use it anywhere. You just use 1,000 to cancel the other tax to zero, and that is it. So that is that. So those are some of the examples: tuition, textbooks, those housing, first home buyers, and disability amount. There are so many, the list is long. We simply use those to reduce our income. Refundable tax credits, these ones we get money in the bank account. And these ones are like the HST, you always get that. You get like the climate incentive, the OTB, all those. You get them on Ontario Trillium benefit, and so on and so forth. So that money comes into our bank accounts. And then also we have the workers' benefit, Canada workers' benefit. That one also comes into the account. But for you to get that, your income must be around 55,000 and below. Anything above that, you don't get that. So, yeah, these are some of the other good credits, like registered retired savings plan, which is RRSP. RRSP is money that you save for your old age. You get an income whether you're self-employed or you're employed. That money, you save it for your old age. And the good thing with this RRSP is that on top of being tax whatever deductible, you can use that money to buy a first home for yourself. You borrow it, you get it interest free, and then they give you like 15 years to pay it back. I did that and I got a house. So you save it there. If it is around 50,000 or whatever it is, go to the bank, tell them I want that money to buy a house. They will give it to you. It's your money, but again, you're supposed to pay it back like for 15 years without interest. That's the good. If you don't pay it back, then they will charge you interest on that. I mean tax on it. The government will charge you tax on it. So it's a good kind of fund that you can use. The deadline for that is March 1st. You still have time to contribute to your RRSP now, assuming you know. And there is no sin here. If you know that, for example, this year, you're going to pay CRA $100,000 in tax, put it in RRSP. You will pay zero to CRA. Zero. Because you put it, and it's your money. Put it there, get it out, and pay for a house.
Come up again.
Okay.
I missed it.
Can you not? Okay, I was thinking we can discuss later when I'm done. Oh, okay.
So,
Yeah.
is it allowed to be dumped? Like if I have 100,000, can I just dump it there? Or there's
Yeah, there are limits. Yeah, you have an RRSP limit, depending on the income you get, and they usually put it on your T4s. So if you see that your limit is 60,000, put it there. Put it there, and then tomorrow go and ask the bank, I want to get that money to get a house. Yeah, because it's your money. It is something that you can do to get. And so, self-employed, I mean, you have a lot of expenses that you can deduct. You know, business use of your home office. Like if, for example, sometimes you work from home. I remember I used to drive Uber when I had just come here. And some of the expenses I used to deduct are like washing a car. I used to use my home water. And so I did that, and CRA called me, they audited me, and I said, please, I paid money, I used my water home. And so I had to apportion it between my home and my car. And then they told me, okay, now use this percentage. I said, fine, I can use the percentage you give me, but it is real. I used my water. So those expenses, even the phone, even if you use your phone to call me, but it is a Uber phone, I mean, you use it for Uber, period. So whatever money you pay to Fido, whatever it is, those nonsense stuff, you can reduce it from your expenses. But the most important one is this CAA. I don't know, some accountants really ignore this, but this gives you a big kind of relief. CAA is basically capital cost allowance. So when you use your car, like use it for Uber or trucking or whatever it is, that car gets old. It depreciates. So that depreciation is allowed to be deducted from your income. And therefore, it is a complicated thing to calculate. Some people, I don't think they look at it, but it gives you a lot of benefit for whatever, even homes, like for rentals, and maybe if you bought a home and you rented it, there are a lot of things you can get from there. But I just want to, even in real estate, I talked about that rental, if you own a home, whatever. So all those costs like maintenance fees, advertising, mortgage interests, utility costs, and property management fees, all these ones, you can deduct them from your expenses for the home. So that's what I'm saying. There is the same thing here. So you can claim in the first year, like assuming I started driving maybe Uber this year. So, I mean last year. So that first year, you only get an expense, a relief of half of the depreciable value of the asset. I want to give you an example, probably maybe later. So even commission employees can also get CAA if you work on commission, like real estate commission people, you work for insurance companies, you get commission. That means you don't work from one place. You have to drive from here to there, to there, to there. Even pastors, if you drive from one church to another church, our pastor actually does that. Your car can claim CAA, which is a good thing to reduce your income. So I want to give you an example. Okay, I want to give you an example. So assuming you bought a car maybe in 2022. So what I'm saying is that a car is in class 10. They classify them. So it's in class 10 it belongs to that class of CRA. And so the rate, the expense you have to deduct is 30% of that. But in the first year, you get only half of that. That's why I'm saying a half of 30 is 15. So when you get 15% of the cost of the car, this one, you reduce it from your income. Your income, self-employed, or if you use your car for business, then this cost of 4,500, if you owe CRA 5,000, then you remove this. You will pay only 500 to them. Okay. So in the second year, you're allowed to take the whole 30%. So in the first year, since you took this, you less it from the cost of the car. This is the balance, then apply 30% on that. So it will be that, 7,000, depending on the value of the car. If you bought it 70,000, then you get more money there. And so don't leave money like that. Tell your accountant, whoever is doing tax for you, that please, I have to claim this, and then you see what they say. So medical expenses, these ones, as I told you, they are not tax credits. But you can claim all medical expenses within Canada and outside of Canada. You travel to Kenya and you get sick, you get treated, just bring your receipts. You will claim that tax. and many other. And then the other thing, if you go and get treatment 40 kilometers away, one way, which is 80 kilometers to and fro, you deduct that cost for going there and coming back. Maybe you used your car, you used whatever you used, either whatever it is. All those costs, you can claim them. I advise you not, if you have a question, we can answer them. So, but you cannot claim for birth control expenses, sorry, but it was proposed recently. They might allow this in the new proposal that is coming out. So these are just numbers, I don't want to bore you, but for expenses for medical, that's what we do, that usually you take lesser of 3% of your income, or the 2,479 is what you have to deduct from the medical. So some of the overlooked medical expenses include private medical insurance premiums, tutoring for children with disabilities. All these are expenses you can deduct in order to lower your tax that you give, or money you give to CRA. Home renovations, assuming you rent your house and whatever, so the renovations and things like that. Travel expenses to seek, yeah, I mentioned that. Contact lenses, you know, dentures and, you know, fertility expenses, and all those related expenses are tax, they reduce your tax owing to CRA. Then, you know, professional dues, like I pay to CPA, people, nurses, owner, union dues, all those expenses that you can benefit from. And then expenses from home, I told you already. But then you have to fill this form, that form called T22, whatever. I think I moved faster. Where am I? Yeah, T200. You have to complete it if you're employed. So Canada Workers Benefit, I talked about that. That is a refundable credit. They pay you money back. But it has some eligibility criteria that you have to earn not less than 3,000 in a year. And you must be earning from employment income, 19 years of age, and a resident of Canada. So you can get, for individual, like 1,395, and if you're a family, you get that. But the income limits are those, for single and for individuals. 32,000 is for single, and then for families is 42,000. So all those you can claim. GST or HST, we talked about that. And landlord who purchases a new home, you also get those expenses deducted. Moving expenses. This is also something that people don't know. That when you move, maybe to go to work, like you've been in Toronto, staying here, 43 Forest Grove, and then you go to where he lives, in Alliston. As long as the distance from here to where you're going to live is more than 40 kilometers, or 40 kilometers and more, you claim any expenses for moving from here to there. You claim if it is storage, transport, you ate food on the way, you slept somewhere, maybe in a hotel for one night, you did what, and so you claim that. But again, the other limit is that for you to claim it, your workplace must not be more than 40 kilometers from the new place. Like Alliston. Now, if you work in Berry, then you claim that. But if you are in Alliston, but you're working in Toronto, no. Because it doesn't make sense for you to claim money. You moved from Toronto, moved that side. So you have to move for work or for education. For you're going to University of Toronto, you're going to, and for students, you claim that every year. Moving cost. So it's a big thing to claim there. Because like you can either claim based on a flat rate or you keep receipts. For example, if you're claiming for meals, and you claim that for 15 days, like accommodation for 15 days. So if you moved and you stayed somewhere for 15 days, some people claim it even if they didn't stay somewhere, because there is a flat rate you can claim for. You can use that and say, okay, I slept here or I ate meals for maybe each day $70. I think they pay $70 per night, per day for meals. So you multiply that by 15. That is good money that you can get from CRA. Yeah, so climate action incentive, you know this one. You get this automatically. Once you're in Ontario, you get it. Home accessibility tax is if you modify your home for somebody who is disabled, for purposes of, somebody to be able to get into your house or whatever. You can get those, and the numbers are a little bit big. Canada Child Tax Benefit, this is obvious for those with kids. The maximum children under 6 years you can get is that. So every month, if you have a child of that age, you can get that kind of money. Then between 6 and 17, you get around that every month. It just comes automatically once you file your tax. You don't need to apply for that. Pardon? Yeah, yes, it's based. Yeah, it is based on the income, but even if you get 90,000 or 100,000, still you get it. Yeah, you still yeah, that's what it goes on reducing with your income. The more you get, the lesser you pay. Yeah. So, yeah, so those are just the conditions for you to get. So it doesn't matter as long as you're a citizen or protected person or student with work permit, you can still get that if you have a child. And then they are saying here that if you're a temporary resident who has lived in Canada for at least 18 months of 18 months, and then who has a valid permit in the 19th month, other than one that states does not confer status. So I think some people have permits that have these words. So it is only when you have those words that you will not get those benefits I've talked about. Because your permit does not confer, does not allow you to get that. Canada Caregiver Credit, this one if you care for someone. And so you support, spouse or common law partner or dependent with the physical or mental impairment. Somebody is sick and whatever, impaired. So you can claim that caregiver's credit. And the amount depends on the circumstances and the income and all other things there. Yeah, the disability credit is also the same. Those ones are also there. So we can get all those. Child care expenses, income has to be less than that. Then, child less than 16 years of age. So if somebody is more than 16 years of age, then you may not claim that. So those are still the expenses that we are talking about, daycare centers, caregiver, all those that go to the children, maybe day camps and so on and so forth. If you pay for your child to be in a daycare camp, then you can maybe sports camp or something like that. Tuition tax credit, this one I talked about. If you're a student, yeah, so most tuition qualifies. And, as long as the university, it has to be in excess of 100 paid. So, we always pay more than that. So you'll be eligible as long as you pay 100, 150, 10,000, whatever, you can get the tuition tax credit. And it must be paid by you, not or your family. Your family, your father, your aunt, your uncle. If somebody else pays who is not a relative to you, it will not qualify. So it has not to be paid by an employer. So if an employer paid for you money to study, you can't claim that as, and remember that is the T2202 for tuition. Student loan interest. This is what you get from the NSLSC online. You can go on their online portal, and then you will get a T4A for the student loans. People sometimes forget that we pay interest on OSAP loans. Also, that interest, you can use it to reduce your tax, and you can even carry it forward. If you missed it for some years before, maybe you didn't get the one for year 2020, 2019, you can still use it this year to file tax. So what is new? There is dental benefit. This one, any child that is under 12 years of age, you just have to go online and apply for it. If, for example, you went for dental, people go for dental because the money is gotten from the government. You can claim it, but you have to have a doctor. You have to have the details of the doctor where you go. You can't claim it without the doctor's details. And they pay around $650. And the income has to be this, which is a good thing. So it means that if your income bracket is 90,000 and below, and most of us maybe fall within that, it means we are eligible. So if you have a child and you don't have insurance, please go, and they do clean up for the kids. And it is available for 2 periods. There will be 2 payments. But as I said, you have to apply for it online. So you have to do that and keep your receipts. So I'm saying that. And then the other thing is the Canada housing benefit that increased. No, not increased, but this is for low-income earners. If you rent and your income was this or less in 2021, that is for single. For a family, 35,000 or less, then you can get this one-time rental subsidy. But you apply online. You go to your My CRA and apply. The last day to apply for that is March 31st. So if you've never applied for that, just go on My CRA and then apply for it. As long as your income last year, of course, your data. So you can't apply if your income is more than that.
One time per month or
Yeah, one month just fine. They pay it twice, I think, in a year, something like that. But it's one-time thing. It's not every whatever. Yeah.
How far back can you claim if you did claim?
How far back? No, I think you just have to claim, like, because it started basically because of COVID stuff and things like that. So it's just a one-time thing, to not that of much, but 500 is a good money, so you can. Yeah. So Canada workers benefit, we talked about that. You must be earning, employment income and 19 years of age, and that one I already explained that one. So I'm just telling you that it's a bit new because they increased it. First-time home buyers. Some people even refuse to buy houses as a group or as whatever because of this. But this is not money, really, because the government said they give you 10,000, but that's not what you get. You don't get that in your bank account. No. What they do, because previously it was 5,000. So what they do, they simply get a percentage of this amount of money, okay? And then that is what you can claim as a tax non-refundable credit. So it simply helps you to reduce the tax that you pay to CRA. But you don't get that money that I'm getting 10,000. No. So they are saying it must be a qualifying home in 2022. So since we are looking at 2022, you must have bought a home in 2022. And so then you benefit from that credit. So they, it was before, it was just a percentage of that, which is 250, but now it has increased, right, from 5,000 to this. So a percentage of that amount is like $500, which 1,500, which basically reduces, because it is 15% of that. 15% of 10,000. So 15% of this is 1,500. So that money is used basically to reduce your tax that you pay to CRA. They don't give you that money in your bank account that you bought a house in 2022, therefore we are giving you 10,000. No, no, no. But they use this as a basis to calculate what you're supposed to use to reduce your tax. And it comes to only $1,500. So, yeah, I think that is that. That is that. You know, I've been so fast, but I know if you have any question related to this, then we can discuss. Anything you want to ask about tax, then we can discuss. The most important thing is for you to find a way of reducing your tax that you're going to pay to CRA. Yes, yes.
Wait. We can only talk with this.
Oh.
Okay, I may ask, like, I would like you to go back to the car expenses, the 30% you were explaining.
The car expenses. Yeah, I think it's around here. I think it's about there. Not so? Yeah, this is all. Yeah. Yes.
If you are employed, you can use that one, like, to calculate the 30%. I missed something about that one on how to claim it.
Oh,
yeah.
Oh, because, okay, if you are employed and you have a side business, like you're employed, maybe, and then you have another, maybe Uber business, for which you use your car to get you income, then you can claim it. Does it make sense?
Yeah, but I want to see, like, the 30%, how did it...
The 30% is the issue. Okay. 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 So what I said is this, that if you started working, maybe driving for Uber in 2022, the first year you started driving that car, assuming you bought your vehicle $30,000, of course, including all other costs on the car. Maybe you put on new tires, you add all those costs, they add up. Maybe you changed, like, the mat, those whatever, whatever things and everything. Maybe you did something substantially big to make that car drivable. You add them up. And so if they add up to 30,000 as a total cost of the car, then the simplest way is this: calculate 30% of 30,000. You get what? You get what? 9,000, not so?
Yeah.
You get 9,000. Yeah. So then a half of 9,000 is 4,500 for the first year. That's what you are allowed to deduct. Then in the second year, the balance is that 30 minus this one you removed. You get reducing balance method. Then you apply 30%, the whole 30% on that amount. So second year, the amount is higher.
Yeah.
Because you apply the whole 30%, not half. Do you understand? First year is half. It was 9, but half of 9. Second year, now you removed this in 2022. So in 2023, you get this, less it from that. The balance is that. Then 30%, you claim that.
And you keep claiming it every year.
Yeah, until the balance is zero. Because we said reducing balance, right? So you keep subtracting. So you subtract and it gives you that. You go to another year. Now the balance, you get this, subtract it from that. So the balance, you see it goes on reducing. It was 30, it is now 17. Until it is zero. Yeah.
And there's something else. When the balance gets to zero, when the balance goes to zero and you decide to sell the car, you have to repay the taxes to the government. That is capital gain.
Yeah, it's a capital gain. If you
It's
sell
called
the car and
capital
get
gain
some
when
money.
you sell
Yeah.
the car.
Yeah, yeah, it's a capital gain.
Yeah, yeah. Yeah, if
Yeah,
you
yeah.
sell it cash.
Yeah. Yeah, it's an income because
Only if when
because
you
you
sell it.
depreciated the car, you got your cost back, the cost of the car. So whatever you're selling is gain.
But only if you claim. If you didn't,
Yeah, yeah. But it's good to claim. Why don't you claim?
Can you claim that if you don't work with your car?
If you don't work, no. You have the car has to be working to get the income. You can't. Yes, yes, yes.
My question is on the tuition for students. You know, most employers give you the 2,500 per year towards your tuition.
The employer.
The employer, yes. So when the employer gives you that amount per year, do you still then claim tuition to the government?
No, if the employer paid, you don't claim that
You don't
because you
add-
didn't pay for it.
No, the thing is, say per year, say my total tuition maybe is 20,000, and my school say I'm doing it in 3 years, so which means my employer has given me 7,500, but I have paid total 20,000 for the school.
So you paid the difference.
Yes.
Yeah, then that's what you claim on.
Okay.
Yeah, not the employer. No.
how many years back can you claim?
No, for tuition they allow you to claim, I think, as many years as possible. Yeah.
Tuition never expires.
Then yeah.
Tuition never expires.
Imagine if you finished school 5 years ago and you never claimed.
Yeah, you can claim it.
Wait until you have high income and then start claiming.
Yeah, you
Yes.
can do that. Yeah, and actually the same applies to some of these credits because they are not giving you cash, but it helps you to reduce. So you need to know, like, if you work out your income taxes, say for last year, and you realize that you don't have anything to pay to CRA, then you don't need to use it. Yeah, that's tax planning. So you can say, okay, let me keep it and use it maybe another time. Yeah.
And that goes also with charitable contribution.
Yeah,
for-
yeah.
Like the tithe that we give at
Yeah.
church, they don't expire. Yeah. Yeah, no, they don't. Charitable contributions, they don't expire. You can keep them for as long as it's possible. But when you claim them, you make sure you have all your paperwork together.
Yeah.
Because CRA is very particular to see a huge amount of claim at one time. And you are subjected to audit. Yeah. And also about the education thing. When you are making a claim to say if the employer paid for you, it depends on how the employer classified that amount that they paid on your behalf, if they included it in your income,
Or in your income, yeah, then you
so
can claim.
so it means you can claim that
Yeah, it
because it
means you
has been
paid it.
subjected to taxes already.
Yeah.
So it means you've also paid, so you can include it as, depending on how your employer classified it. But
Yeah.
if they paid it off the tax, then you have to declare it in your taxes that you had extra income from your employers in that particular year. Then you can bring in your educational tax credit, then they will work it out for you.
Yeah.
I think I want to ask about when you are claiming child benefits. What if you have a child, but it's she or he is outside the country? Do you claim a child benefit on that?
Yeah, there is that question. Most accountants don't know, but I claim it for my clients. Because you have proof that you paid for that, you cater for that child in Kenya. As long as you have proof, yes, I will claim it for you. Or somebody else should claim it for you. But some people don't, I think out of ignorance, because I had a discussion with the CRA about it. Some agents in CRA also don't know, but some know. So you can claim it, truly. As long as you have proof, you send money to that child. No. You don't get CTB for that child. But you can claim the expenses you pay because it's your child. And you're a resident of Canada, you pay tax here. Yeah. I pay school fees. I paid school fees, maybe medical, whatever it is, for that child.
No, I'm thinking whether it's the same, because if I have children here, the only expenses even when you have kids here, the only expenses like you can claim is like maybe medical or recreation or such stuff. So I'm wondering if your child is away, what kind of expenses can you claim?
Yeah, there are those like school fees you paid for the school activities, or maybe soccer, or you paid, the normal expenses as you would claim while here. Yeah. But some, I told you, some accountants, they don't claim. But if you have the right to claim that, those expenses, for sure. Yeah, because you work here, you pay tax here, but you have a child who hasn't come here. Yeah. So, yeah.
I wasn't there from the beginning.
Oh.
I wanted to find out about investments. As a taxpayer, what kind of investments are advantageous to a person that can reduce the tax burden at the same time looking at the future aspect of life?
Yeah, in terms of investment, okay, first of all, I want to make this point that most of us here have that account called the tax-free savings account. Now, that account is a good account for you to use it to invest. If you have money in that account and you invest that money is not taxable. In tax-free savings, you have money there, maybe you buy stocks, whatever benefits you get from that account is not taxable. In terms of investments, I did not do any research on investments, but most of the investments, like, it depends, like maybe stocks, mutual funds. You can only pay maybe if you get, like, you get, those benefits, like if they pay you, maybe, for example, if you bought stocks, maybe in Apple, whatever, and you've never gotten any, they've never declared any dividends, maybe for years and years, then you don't have to pay anything until you get the dividends. But other investments, like if maybe you invest in maybe real estate, if you don't sell the building, you got it, it's there, you've not sold, then you have to pay after after you've sold it, after you've sold the building. So that's the only time you have to pay. So, I mean, there could be many other investments you can do as long as you've put in money and you have not disposed of that investment. Yeah. But if it is a normal business income, whereby you're maybe like Tim Horton is you're getting revenue, then you have to pay tax on that. Yeah.
If I have a loss in my business, let's say I start a business and I have a loss of 5,000 or 10,000, I saw on your notes you said that I can get it back.
Yeah, you can. It's tax deduct. Like you claim, like a loss gives you, like you cannot pay tax if you got a loss. You don't. So it's like an expense. It is like tax deductible. Do you understand?
It reduces the
yeah,
tax.
it reduces your tax payable.
But they can't get it.
No, they don't give it.
They can't give you a loss.
No, they can't give you.
If you have income in that year, and that income you are subjected to tax, so they can either tax you and then refund you. So instead of doing double paperwork, they just cancel it off.
Yeah. It's a good one.
If you are, let's say, for example, you're new in Canada and then you get a cash job, do you have to, what is it called, declare? Like, when I'm filing my taxes, do I have to say I've been getting money? Like, it's a cash job. And then my employer, because my employer is also filing taxes, how is it going to, if I don't say I've been getting that money when I'm doing my taxes, would it bring an issue when my employer is also, whatever, he's reporting that he's paying some amount of money somewhere?
No, basically, I personally don't encourage cash, whatever, but sometimes they are for a reason. But basically, yes, you have to declare every income you make in Canada. But the employer, the issue of the employer that is going to declare, I think that is, I mean, if they are paying you under the table, then it is under the table, it is off their books. But the issue is, I think as Christians, first of all, I mean, you have to declare that income. But because the challenge is here, that when you get cash income and you don't file tax, there are certain things you will miss out on. Like if you have a child, maybe child benefits, maybe if you need to borrow money, maybe to get a mortgage, you can't because you work, you get under the table, so you don't have a tax assessment. So it's a good thing to file tax, so that's what I can say. Yeah, but some people don't file, but I'm not encouraging you not to file. It may be difficult for CRA to know that you got this income under the table because it is under the table, basically. But it's a good thing to file tax because there are those benefits. Maybe you want to go to school. They usually ask you for notes of assessment. You want to get credit. You want, things they usually come back to you. Yeah, so, yeah.
Just to add on that, when you are getting the money under the table, you are not registered under CPP, which is Canada Pension Plan.
Yeah.
So that means when you get owed, they can't make an assessment on how much they can help you because you never showed up.
Yeah.
So that becomes a problem to you at a later stage.
Yeah.
Because your retirement from the Canada Pension Plan is based on your income that you are earning while you are in working stage. So when that time comes, they can't assess how much they can help you because you haven't been working. That also declares that you have been a dormant citizen who hasn't contributed to the country, and the country cannot reward you for your laziness that you were just staying at home. Hoping that when you get old, you get free money.
Yeah. Yeah. Because that old age, is good. And then the other thing, if you're somebody who is seeking papers and you work under the table, it is disadvantageous. Because how do you show to the board members that you contributed to economy? the economy. But if you have a job, and then, I mean, you're working, basically it works for you in terms of decision. Yeah, they make decisions sometimes depending. You came like 2 years ago, you're going for hearing, but you don't work.
I was going to add too that also it depends the understanding you have between your employer. If the employer where you're working is expecting you to be a contractor, that he has your social insurance number, is going to say he has given you a contract. As a contractor, you are required to declare your income and pay your taxes on your own. But if their understanding or the agreement is that it's under the table, then it's under the table. It's not going to take anywhere.
Yeah.
It doesn't have your social insurance number. But if it's going to, because when the employer declares also, they have the social insurance number that have to be linked.
Mm-hmm.
Yeah.
Yes, I'm about to, I think, to finalize. Yes.
I have another question on the children.
Yes.
Children in school. Say Adventist education, where you're paying, you're required to pay every month. Is that, can you claim that money that you pay for Adventist education?
Private, but yeah, you can. Those expenses, you can claim them.
Okay.
You can, they can help you to reduce your tax. But not that you're going to get a refundable credit, but it helps you to reduce your, because you're using the money that has been charged the tax to, to pay the other side. So it can help.
So one more question. If you are doing business, and the way you said you calculate, and let's say down five years, the road, your money of depreciation has ended, it's gone to zero. But the car that you are using is still in a good condition to work.
Use it.
What kind of expense then can you claim?
The normal gas, repairs, all those. Whatever goes on your car, but not depreciation. Yeah. So, I think that why. Yeah. Okay, she's asking me that if you have maybe 2 properties, maybe one for your home, another one for rent. A rental property is like business. It's treated as separate business, rental. And so, as long as that house, you bought it and you never lived in it before, you can also claim the depreciation for it. But if you lived in it before, the depreciation part of it you don't qualify for that. But if you bought it, and as soon as you bought it, you got people in there. So the other expenses you can claim, renovations and all those, the taxes and whatever goes on that house, you do just like the business person, like any other business. You remove all those expenses from your income.
Does the rental income, is there anywhere you declare it as income?
Yeah. You file it as income, rental income. Yes, correct.
And is it netted off the mortgage or no? It's just the
No, what you do, you get the income and then remove your expenses. Like the mortgage you paid. Okay. Yeah,
The
those
insurance.
expenses, the difference is what is taxed. Okay. Yeah. So I think I just want to thank you guys. Thank you for being attentive. I hope we learned something. And I don't know if I'm the one to give a closing speech, but yeah. Yeah, you can get it. It is all over the place.
It's not.
Then you don't like me. Because if you don't have my number, then you don't like me. So again, do you have my
The other way around.
If you want to see him
Everyone has my number, so yeah.
There are no more any questions? Because there is a refreshment which is coming as you bring your questions. You want to release him right now?
No.
I want to go.
The questions.
I don't have business cards.
They have questions. There is somebody who has a question. Yeah, there is somebody who has a question.
Yes, yes.
Let's use this moment.
For people who have children like out of the country, and then now they bring their family, can they get, how many years can they get for child suspension? I know before you could get as many years back, like I don't know, they could refund. Let's say you came in 2012 or 2015, and then you became a permanent resident 2016. Your family doesn't come until 2019. You could get child tax benefit from those years.
For the years you were in Uganda?
No. The years you are here, but you are not a permanent resident to get child tax benefit.
Oh, I think they do give that. I need to maybe get more information about it. You come here, you're not a permanent resident.
So you don't qualify
say for 2 years, you
yes.
don't qualify.
Mm-hmm.
I think they calculate that.
I think so. So that's something that our people can benefit.
For every year you are here, that you are not a permanent resident,
they do give that.
Considered half a year.
Half a year?
Yeah, that's what they do.
So
you get.
Calculated based on half a year.
Yeah.
Because that's something that can benefit our people who are here for some
time.
You get back money from the government.
Yeah, because I know someone who got that money, but they use it a half-year rule.
There's a very good question here. Those newcomers, especially newcomers, a very good question. Can Esther repeat the question?
So what I was saying is, for example, you come to this country and you are not a permanent resident for some time, you have kids here, and then after you become, let's say 2 years later, you become a permanent resident, you can claim the child tax benefits for the time that you want a permanent resident, but you had kids with you. You can get money back for child tax benefit. No, but as long as you are with your kids here.
Yeah.
But it's not full year. That's what I was asking.
Yeah,
how
it's
much
half,
you get.
half
they calculate
year,
it's half year, but it's good money.
Yeah, that is good money because it comes into the account. So.
Yeah.
Can you claim for those parents that send money
If your parent is here, you can claim a caregiver, right? Old age.
No, if he's here, yeah. Caregiving.
If they are here, you can claim.
No, I haven't seen that.
Maybe
no, I just need to research on it.
Yeah.
I haven't seen that. Yeah. But the thing you need to avoid is, I've seen at least from my Ugandan counterparts, I know of people who usually hunt for refunds and they end up going to people who are going to make for them refunds, but cooking up those refunds, sometimes it causes trouble. So you need to be extra careful. Get what, it's like if I prepared for you tax and you don't get a refund, don't come and hang me. It's because of your income and whatever it is. So,
I want to ask, can we claim for OSAP too?
Pardon?
OSAP.
Yeah, I said like you can claim for the interest you pay on OSAP. Like, it's a tax, whatever, deductible thing, tax credit thing. Like you can deduct it from your tax. The interest you pay on OSAP. Yeah, the more you work is I think the best way to go is self-employment. I mean, self-employment is good because you can claim even whatever, the food you ate on the... I know. But there are some employers, especially like nurses. Why don't I work as a contractor? Like, I just work as a contractor instead of being employed. And then I form a business and then, because I mean...
But then you have to work for yourself. Your benefits that you get from employment.
Yeah, you have to save for them yourself, which is okay.
You also pay when
you're
working for something.
If you don't have a mic, don't talk. I'm the one who has it. Now I'm talking.
Yes.
if you owe a lot of money to the government, what's the best?
Excuse me. Yeah.
Hello.
You have a question. You have a question. There's someone meeting.
If you don't have a mic, don't talk. Jared, I'm the one who.
What is this?
Can you
Shut up.
cancel
Thank
that meeting? All right. If you owe a lot of money to the government for years back and they are on your back, which way do you? How do you solve the?
On your back, it means you don't pay tax. Okay, I mean, first of all, there is no way you can avoid government tax. If it is due, you have to pay it. But one way that I would advise is basically to pay it in installments. That is acceptable. They can let you pay the money in installments. Then too, I mean, you need to think of what expenses that maybe you could use that were not used before or you didn't claim. Maybe you never claimed for depreciation, maybe you never claimed for this, and you know, as long as you have proof that you understand that they are expenses for your business, then you can just reduce. But there is no way you're going to avoid to pay when they're on your back. You just have to seek for whatever paying installments, or maybe if you made a loss in a certain year, after removing your expenses, you have a loss, then that loss will help you. Things like that. But it's difficult to really go around it, that you can maybe avoid it. Yeah. As long as they know that you have their money, it's difficult. Yeah. Yeah.
So my fear is, can they garnish your account? If you, like, they can come for my house?
I think so. They can go through the go whatever.
The government will come after
They
you
will
in
come
the bank.
after you. Yeah.
The thing is, if you owe, I think if you claim and you are supposed to get a return, they can garnish that money. I had a personal experience. We're on YouTube, right? I will speak this on YouTube. I had a personal experience many years ago. When I came in this country, I was on Ontario Works. And as the story goes, you know, how you work, and then you get into Ontario Works.
Yeah, it's dangerous. Yeah.
And then they kick you out. And then, of course, they just have to start off. And I started working, and life continued, right? So Ontario Works was demanding some money for when I was working. Because it was before we even got married. 2003, 2002. That's when I left warfare. 26. I tried to follow, I even called. And then that's when I got a letter saying they took their money.
Yeah.
Right, so
Take it.
right? So you can hide them. So even if you run, you cannot hide them, they will catch you.
They will. Yeah. And if you get like child tax benefit, they will take it. They will claw it back. They'll
Any other personal experience, please feel free to share.
They wait at the end of the month, first of all. They know you're going to pay for this, and then they take everything. You know your account that you want, first of all. They freeze your account, so you cannot withdraw, you can only deposit. So they wait. You can deposit. You can deposit, but you can't get it out. And even the bank can say anything. When you're now paying the rent, and then you find insufficient funds, like, they take to the last setting there.
But also, I had a personal experience, but on the positive note. The government was claiming that I hadn't paid enough tax, and they said I owed them 13,000. And I said, no, I don't owe you. They wanted this, and I provided everything.
Yeah, you need to.
I fought with them for over 5 years.
Yeah.
They removed that money, and they found that I owed them only about 1,100.
Yeah.
So we can also be very careful.
Yeah.
Human beings who are doing sometimes they can say you owe them.
Yeah.
You have to look.
Yeah.
And as long as you have your paperwork trail and
Good.
everything.
Good.
Even I printed my bank statements and I showed them. I said,
Yeah.
this is what, and I fought it.
Yeah.
I paid them about 1,100 out of 13,000.
Yeah, I do that all the time. I do that, yeah. So you need to keep your paperwork for sure. You can fight them, don't fear. Yeah.
There's another question.
Yeah, I hope it's the last one.
Yeah, this thing have been bothering me for so many times. I don't
Sorry.
know.
Sorry, dear.
Sorry. I don't know the reason why, like, the more you work, the more you pay tax. Why? What's the reason?
No, it's the way the tax system works.
I thought, like, the more you work, you enjoy your money, right?
No, yeah, because as you know, the tax system really, they get money from the rich and they help the less income earners. And so, yeah, I mean, that's how it is. It's the system, the way it is. So, and I mean, for me, I don't complain because we get services. So I mean, if you're paying in Africa where they take money and they don't do anything, but they clean your roads, you drive, they put salt, they do this, don't claim about it. I mean, it's fine. Just work smart. Find a way of working smart. You can go around it in a legal way, in a better way, not a fraudulent way. Yeah. Yeah. Yeah, maybe more children. It's a good one. So, okay, maybe the last one.
Yeah, the last one.
Oh, okay, somebody. Yeah.
The last one. Is it even possible, if at all, to write off OSAP as a bad loan?
Oh, okay, what I know, OSAP can be forgiven. But OSAP is forgiven under certain circumstances. One, if you worked in less privileged areas, like where I live, like small communities, like you work, as long as you click 40 hours and for the whole year you worked there, that OSAP is forgiven. You can apply for forgiveness. Yeah, they can write it off. But it's for nurses. I know nurses, basically. I don't know if other employments, other whatever. But for nurses, if you work like in those small areas, maybe like in Alliston or wherever. Alliston, what is the population for New Tecums? That's a small town. You can search it up. You can Google. Just put in and say qualification is for OSAP forgiveness, and then put in your city. They will show you that one qualifies. Yeah, OSAP is forgiven, but people don't know because people want to live in Toronto. The only difference between where I live and here are many lights, but nothing much. Many lights and too much traffic, but I go there, work for 1 year, they forgive me. That's a cool lot of money to be forgiven. Yeah.
Will pay for you
Yeah.
if you earn less than 40,000 a year.
Yeah.
They will pay for you that money every month.
Yeah.
I didn't pay a penny in my OSAP. I owed 60,000. They paid for me repayment. As
Good.
long as you apply every 6 months and you prove that your income is less than 40,000, they will pay off for you.
That's why we need to file tax.
So yeah, but you have to file your taxes.
Yeah.
They have to see your
So members, thank you. It has been an honor to speak to you. Let me drive and go back home. Thanks. Yeah, thanks so much.